Hi everyone. So let's start today's analysis. I think again a difficult day for the markets. Probably we are down in all the major indexes: small cap, mid cap, Nifty Bank, FMCG, autos, IT. I think all the indexes were in red. Metals, pharma. So it was a four-way selling. All the indexes were down today, and it all started from as usual, Mr. Trump. So Mr. Trump on the weekend announced that he'll be putting tariffs on steel and aluminium by 25%. And he also told that he'll be putting reciprocal taxes on all the countries, which he will announce in the press conference in this week. So he has not told what percentage, what country, but he told universally that he put reciprocal tariffs. So reciprocal tariffs means suppose India is putting 25% tariff on America on some goods, and America is putting only 10, then he will increase by 10, 15%. So he'll make it equal. So what he means to say is that he wants to have a equal tariffs between the two countries, whichever country he's trading with. That's what he meant, and so market didn't take it in a good stride, and we saw some falls today. But let us see what happened actually. But before that, before this tariff part, I just take you along what happened on Friday in the U.S. markets, because just some small things are important. So one thing is their job report came. The number of job openings reduced actually from the expected number. That was a good news. But the unemployment rate came down from 4.1% to 4.14%, which the market didn't like. Also, the hourly earnings rate increased for the labor, which again the market didn't like, because the rate of labor is going up, which means inflation will sustain. Also, a survey is done wherein people try to forecast what is the inflation for the entire year, and the forecasted inflation has been put at 4.3%, so almost a percentage higher than what it is currently today. So that was another reason why markets reacted to it, apart from these sanctions news. But these were some things which the market reacted. Also, uh, there was a number from Amazon which didn't come good, so the stock was 5% down, so they're putting some kind of pressure on the Nasdaq as well. So these were the reasons, and what happened during the weekend on the US markets part. But after tariffs were announced on the weekend, and let's analyze what happened today. So let us assume that tariffs were the reason for the fall, but I'll try to give my contra view on this. The reasons are as follows. So US market itself today was in futures, at least it was all up. Nasdaq was up around 100, 205 points, around 10 points. Dow was also trading higher by around 60 points. Nikkei was plus. Shanghai was plus. Your Hang Seng was plus. Kospi was plus. So all the Asian markets were in plus. Europe was all trading, and Europe again active trading. It's not about futures. It was all green, and US futures are also green. So if tariff would have been the reason, then only India should not fall. So I mean that may be a trigger, but it cannot be a reason. Then what's the reason? So today, as soon as the market opened in the currency market, rupee fell to 87.95, 50 paisa drop. It was around 0.5% drop. It almost touched 88. Yes, there was an intraday recovery because I think RBI would have intervened, and artificially again we would have taken the rupee higher. So at the close, I think it was only 5-10% down. It recovered drastically, but probably it was all artificial. We would have asked our public sector banks to sell dollars in order to increase the rupee price. That would have been the reason. So that was a major trigger. The currency is currently going down in a southward direction fast. I also told in my previous videos that 88.5 kind of a level is what economists are expecting, where rupee should form some kind of a bottom. But that's only an expectation, that's only a guess, that's only an estimate. And I don't think probably we'll be landing to 88.5 very fast. But the reason is very simple. If the dollar index cools off, rupee does not go up. But when it moves up, rupee drastically falls. So dollar index has moved from 108, which was on Friday. Now it is around 108.3 kind of a level. Not much, but it has moved up. And you see how the rupee has reacted. Bond yield also gone up. Bond yields are now trading around 4.5. That's because of the inflation report and the job report which came on Friday. It is, I don't think it was major due to tariffs, but mostly it was due to the jobs report. So India, the biggest problem is this rupee downfall, which is creating problem for FIAs, because They have all their holdings in rupee, and if that drastically falls, then even the standing portfolio goes for a toss. That's what I think one of the triggers. But if you see the other currencies also, I think yen, even Europe currencies, even Chinese currencies, they all go down. So the problem is why India is only reacting too fast or too sharply. Why this is happening in India only? I think the reason probably is the lack of buying. Nobody wants to buy in these kind of markets. The uh, seller is very heavy. On every good news, we get supplies. We had a good budget. The supply came. On the budget itself, it supply came. Then again, in future, further days, further trading days, again the supply came. The RBI policy was good. Again, supply came. Delhi elections were good. Again, supply came. So the supplier is sitting with quantities and he wants to just offload his quantities, and there's a lack of buying because currency, yes, it opened very lower, but then it recovered. So if the currency was recovering, then the market should have also recovered. Yes, we can say that there was a mild recovery, but that was very mild recovery. We cannot call this a recovery because as far as the rupee is concerned, at the close it was just 5% down. So 50% say it has recovered almost 45%, means 90% is recovered its losses. But we didn't see the recovery of 90%. Some recovery was in the Nifty Bank, but other indices, if you see, in reality, Nifty reality was around 3% down, autos of 1.5% down, pharma was 2% down, Nifty metals around 2.5% down. So there was a broad-based selling, and I think probably what I feel is there is surely lack of buying. There is a very big hit on the sentiment, and moreover, see, other markets have corrected, but they're not corrected too much. They are 1 to 2% down from their highs. Chinese and Hang Seng markets are not even corrected, whether their tariffs are being already imposed. Europe also mild corrections, not much. Nikkei is trading in the same range, 1 or 2% up and down. That's all. So it's only the Indian market which have fallen from their highs around 12-13%. And the problem is because of the lack of sentiment and the lack of buying, they're not just able to stand up. So even little bit supply is not able to absorb. I will not be surprised today. Yes, there'll be a price selling, but I don't think their numbers will be so large. I think the numbers probably would be in 2,000, 3,000 kind of a range. This is my guess, but I still feel numbers will not be large in terms of cash selling because there's a lack of buying. Also, yes, there was a in the futures and options. Probably there was a lot of selling from FIAs on Friday. Also, a lot of shorts were added, and I think the net short have now crossed around 1.7, 1.8 lakhs kind of a figure again. So, which means FIs are capitalizing on shorts continuously, but market is probably not sinking also to that levels. Anyways, we'll see our stop losses anyways there at Nifty at 23 to 50, and if it triggers, we'll be out of the market. That's fine. But the thing is, the market have a lot of good news to cheer now. So as I told, the earnings are coming good. Probably you have your all the major events are all good, and they've all been good. So budget could have been bad. It is good. Your RD policy would have been bad. It is actually better than expectations. Delhi elections, people would have thought that it could be a negative for political system in the country. It has gone in a good, very good way. Nobody could have expected any better results than what we got on Saturday from Delhi election. So that is again a fine. So all these good news stand and they will not vanish. It's not that the budget budget reactions will go away from the market soon. RBA, whatever he has taken, that can go away from the market. They all will remain. So positives will always remain. The only thing is how much sentiment demolish or how much sentiment breakdown we can have. That's probably we have to wait and see. Uh, Rupee is something we need to track, and dollars that's something we need to track. But it is also not actually rupee is falling because we were overvalued by around 4 to 5% than the other currencies, and we've probably given off a lot of things. So yes, we may fall to 88.5, but let's see how it goes. The problem has been the FIA selling, which comes in at all higher levels, but there's an end to it. There's an end to everything. So according to me, yes, today markets were a bit of caution. The markets were they were giving a bad feeling, but I still feel that we have still saved our important levels in terms of Bank Nifty and Nifty both. So we'll still remain bullish. Anyways, we have placed our stop losses. If at all the market goes down, we'll be happy to submit to the market because the market verdict is the best verdict, and probably we'll have to bend down its on that verdict. Other things which I thought, one thing which I thought was Gift Nifty was around 93 points down, and Gift Nifty is something which is traded in dollars. So when the Nifty was trading around 230 points down, Gift Nifty was only 93 points down, which means that, and if it's in the morning, the Gift Nifty was down around 60, 70 points, which means that Gift Nifty during the trading session in India, actual trading session in India, only 20, 30 points down, whereas the Nifty was down from 60 to around 240, 250 downs, points down at one point of time, which means that actually the currency is being sold. It's not the real shares or something. People are actually selling the currency. Even if you see the FIs also, they are actually selling the currency. So if that is a trigger, another all other events are behind us now. So, if that is a trigger, which it is looking like, then keep a very close eye on dollar and especially rupee. Whenever it will start forming its bottom, which the economists say it should be around 88.5, and generally we should believe economists because they have a lot of inbuilt homework and they do a lot of study in terms of how things should pan out. And if we believe that, so whenever it reaches 88.5 or those kind of 90 or 89 kind of levels, that is the bottom where the rupee will stand out, and probably then we may attempt good recovery. On the other hand, if you will see a recovery from rupee and start touching, if it start closing below 87, then again you will see a sharp recovery in Nifty again, because if that is a trigger, which it looks like that is a trigger, because I don't think even the sanctions of steel and aluminum should not bother India, because those will only create sanctions for the country who are exporting these metals. We are not exporting these metals. We are actually importers. We import metals. So that should not be a cause of worry at all to us. Yes, pharma index also reacted today because he has told that he wants to he'll put tariffs on foreign pharma, that India might get included. But we are seeing them Mr. Modi is going to visit Mr. Trump on 13th, which is just on Wednesday. So probably we should not see much of a tariff war between at least India and USA. I don't think so. Yes, some tariff war, Mr. Trump will always say. Also, yes, Mr. Trump has told in one of his interview that I've had a good talk with Russia, Mr. Vladimir Putin, and we all have agreed to how to put the end to the war. He told he will not reveal how he'll put the end to the war, but he told that he has a clear and good strategy now how the war will end. So that's again a good news. So let's see how the market goes, but keep a close watch on dollar and rupee. I still remain bullish because the events are past and all the events outcomes have been positive. There's not even a single event which has given a negative surprise to us. All the events are positive. These are long-lasting events. See, the RBI rate cut will be long-lasting, and probably we'll see another rate cut in April. The budget will be now, whatever has been tax cut has been given will remain for years to come now. You know, so all these things are very long-term kind of a better scenario which will prevail. And someday or the other, sentiment will improve, and someday or the other, we'll see bottom in our currency scenarios, and that will be the trigger level for our markets to also go up. So with this, I end today's video. Thanks for watching. Thank you so much.